everybody. Hope you're staying warm on this incredible Thursday morning. If you notice, me and Ruben are doing all we can to stay warm in this beautiful weather. Like every Thursday, we are back on our Ask the Lender presentations. We have a new topic for today, and the topics are usually driven by your input. Realtors submit comments, questions, ideas, and things that they want to learn and programs they want to learn, and we wrap it up and put it together. So here we are again. Let me intro our intergalactic manager for the Prime Group over in CMG. For those that don't know, this is the one and only the legend, Mr. Ruben Crispino. How are you, Ruben?
I'm doing great. I'm doing great. Happy to be back from Mars. I took a shuttle up to Mars. Apparently, we're going to be in Mars pretty soon. I'm hoping to start doing loans in the real estate in Mars. Hopefully at the end of the year.
Awesome. So you're already working on loans in Mars.
Yeah, we're trying to.
Okay. Now, one question I have is, do Martians have good credit scores?
Excellent credit score. They're all green. That's all I can tell you. They're all green.
Did you take Leo with you on your trip to Mars, or Leo's passport doesn't let him go to Mars?
No, he can't get out of Hialeah.
He can get. All right. So putting all kidding aside, Ruben, a lot of agents have approached us because of the affordability issue with South Florida, and their questions are, hey, we have buyers, but the inventory that is out there for buyers are homes that need a little bit of love, a little bit of attention, a little bit of repairs, and these people are just literally walking away from these opportunities. Are there any loans that they could use that could help them acquire these properties that need a little love? So you went back to your magic toolbox and you said, Ernesto, we got great rehab loans and we have great construction loans that are not as complicated as most people assume they are. So do you want to break in and talk briefly about both of them, and then I'll hit you with some questions? You want to do a quick intro on both of those programs?
Well, so again, we're looking for solutions, right? The products that we have is not really, and we're going to talk about them in a minute, but we're looking for solution. What is the problem? The problem is exactly what you just mentioned. The fact that, we have the inventory that we have, maybe a little banged up as far as age or size, not exactly what people are looking for, where it's affordable. So the solution is, let's take what we got and make it better. And, going back to what you mentioned about the products, we don't just have two. I think we have at least 10 products that are available, depending on what solution you're looking for. So, just imagine if you took a family looking for a home to be maybe closer to work, maybe a little further east in Dade County, to an older neighborhood that has great bones, but doesn't have the updates that they're looking for, whether that be the kitchen or the flooring or the bathrooms, a pool. We can do many, many things to help find a solution to their problem. So again, we have 10 loans. We have renovation loans. We have the one we talked about before, which is the FHA 203K. We have the Freddie Mac Choice renovation. We have the home style renovation, on and on and on. We also have straight construction loans. We have a two-time close, which is a way to go if you're building a house for yourself, or better said, if your borrower is building a house for themselves. And then we have actual loans for builders. If you have a builder in your database that's looking for construction money, we have regular standard construction loans where they want to build one house, two homes. Where they want to build a jumbo house, we have a jumbo construction loan. And if they want to build a whole community of 1,000 homes, we have that too. So the products are all there to assist whatever, I guess, situation they're in, and we have a solution.
All right. So for the rehab loan, what is the eligibility for the buyer, and requirements for that buyer. If we're looking at a house in Alapata, which is an up and coming area, great location, great accessibility to the urban core, but it's houses that were built in the early 50s. Some of them need some repairs. So working with a buyer, and those are very affordable homes, those are under 350 to 450. What are the requirements to make them eligible for them to buy? What do those buyers need? What qualifications those buyers need for those type of properties?
Okay, so give me 1 second. Excuse me, I have a little, something real. Sorry, I had to use the new intercom, which is be yelling. Um, anyway, so again, they each have their own individual differences in a regular loan, but for the most part, they're very similar. You can have a conventional loan and you have FHA loans. And those are, we're talking about just standard construction loans. For example, the rehab loans, FHA loans, gonna, be based on FHA standards. In South Florida, we can go up to 654, 350 now. On conventional, we can go up to 806,000. And the approval requirements are very similar to a regular one. It's nothing crazy. It's nothing out of this world. It's nothing from Mars. All right. It's the same guidelines for the most part. There are some additional possible fees just because when you do construction, you have um, more inspections necessary. So there may be
Okay.
an additional fee on the construction, on the inspection, on the appraisal, what have you. But again, very simple process.
Loan limits on the so when the focus is on the rehab loan, are there loan limits on these rehab loans available?
Yeah, it's the same as your regular loan. So on conventional, it will be for a single family, it's the same. The loan limit on Fannie Mae and Freddie Mac is 806, 500, and for FHA on a single family is 654, 350. So what's pretty amazing is, we stick to the FHA, and there's, as long as they live in one of the units, they're a primary residence, they can go up to 837 on a duplex. So it gets interesting. The renovation amount or the construction part of a loan is included in that. So for example, on an FHA loan, we can go up to 654, including the renovation. So let's say, we'll give you $500,000 to purchase the house and an additional 154,000 to repair it. So we have to stay within those limits. For those renovation type loans, obviously we have jumbo loans also for construction, which we're seeing quite a bit of. A lot of people are starting to buy homes, knock them down for the land value and build new. The build new is huge now for many reasons. Again, the location out east in our area has better access to a lot of the business centers and work centers, especially when we're seeing more and more people having to go back to work in office at least some of the days. And so when you come out east, the property is a little older. So we're starting to see them knock down and build. Also, insurance costs. Once we have a newer home, proportionally, the insurance cost is significantly less.
Um, Type of repairs, scope of repairs. So what you were explaining, I was looking at a couple of homes, like I told you, in that Alapata area, where you can find a home, a fixer-upper, for about 400, $425,000, 5,000 square foot lot, 4 bedroom, 2 bath, about 1,300 square feet, right? Market value, like you were saying, of a fixed up home, and there is about 555 to 600.
Mhm.
So
Yeah, so that's a
that type
perfect
of
example.
property fits in the there's a
That's a
okay.
perfect example. Yeah, it's exactly what we're talking about, right? It's well within the guidelines, so both FHA and conventional. So you again, what happens is, and the process is pretty simple when it's a renovation loan like that. The property gets closed on. In other words, your buyer now owns the property. They go to Title Logic, they close on the property, and they own the property. The construction portion gets sent out to the builder, contractor, whatever it may be, in draws typically as they do the construction. But the loan amount is the original loan amount plus the construction cost. What you mentioned, which is very important, is when we're doing a renovation type loan, we're going to get two values on the appraisal, the as is value and the as repaired value. It has to appraise on both sides.
Okay, okay. And so do you begin to pay, since you talked about draws, well, going back to this one example, 425 fixed up, it could be as much as 600, let's call it 550. Do you pay on that extra 125 from the beginning, or you have a second close at the end? Or do you got to pay the whole amount from the beginning?
You're going to pay on the whole amount from the beginning. The second close option becomes on a true construction loan when we're doing ground up. So on a ground up construction, you would only pay on the draws, like you were mentioning, and then you have a
Okay.
second close.
Okay. No, no, no,
But
no.
that's only
I
full
I
construction.
think the rehab scenario is a great scenario for everybody working with an entry level buyer,
Yeah, I
because
agree.
it
I
gives them
mean,
the ability to acquire a home, uh, get it fixed the way they want to. So before we jump into that one, are there reserve contingencies that they need to have for these type of loans?
yeah, there's a reserve contingency, and just so you know, that's not an expense. It is a necessary amount that they need to have that will be put into the loan. So it's typically can be between 10 and 20% depending on the size of the project. And that is returned to them in case that it's not necessary. So basically what a reserve contingency, for those who don't know, is that we have bids on or proposals on construction costs. And as we know, a lot of this is, always ends up being a little more, right? In Spanish or in Cuban, we say yaque, right? Bueno, ya que estás ahí, ponle, the jacuzzi, right? Ya que estás ahí, ponle la piscina. So that's what happens with a lot of these additional costs that we have. So, uh, you have to be aware of that. So there's a contingency amount that is budgeted. Absolutely.
Okay. So in South Florida, the joke is that everybody has a real estate license and a contractor's license. That's the
Mhm.
joke. Let's not hide from it. I assume that you cannot use my primo, I cannot use my cousin who has a contractor to do the work, right? I assume that there's some guidelines or some you gotta hire with the right, the guidelines are, or can I use my cousin? He's a great guy.
I mean, for the most part, he may be a great guy, and but we do want licensed and insured contractors. Uh, and again, you don't always have to use a general contractor. So, for example, if you're doing a streamlined 203K and you're only doing a roof, or you're only doing an AC, I mean, a roof nowadays is 30 grand on 25 grand, whatever it may be. You don't need a general contractor there. You just need a legitimate roofing contractor that's licensed and insured, or air conditioning contractor that's licensed and insured. And as long as they are, then that will be accepted.
Okay. Let's play devil's advocate before we talk about new construction. The time period came and went, and my primo, who is a contractor, realtor, does Uber, owns a restaurant, and does something else, did not finish the job on time.
Right.
¿Qué pasa?
Well, there's a contingency for that. It does get extended.
Oh,
Typically, these
okay.
are for 12 months, and there's an additional 6 month extension. So, again, on the loan, on the streamline, it's something smaller, right? A roof typically can be done within weeks, right? I mean, I had my roof done in a week. Um, Air conditioning also. Now, the extent of the renovation is going to determine the time frame. So, we understand that, your cousin may be busy doing Uber. You missed OnlyFans. They're probably doing OnlyFans also. So, they're busy. They're busy with that. So.
No, he does only flans.
Too funny. But yeah, listen, I think, like I said, I really want you to imagine this. Close your eyes as a realtor and think, look, these are my buyers. Why aren't they buying? We have a good price point. The example Ernesto just used is amazing. This is the solution. They can afford 400. It's, down payment is FHA, 3.5% down. Now it's going to be 3.5% based on the full value, not just the purchase price, including the construction costs. But they come out of here possibly with the house of their dreams, in a location they want that they can afford, with all the bells and whistles that they want. Uh, what I found super interesting with some of these programs, they can actually, if it's legal to do, and I know you and I have talked about the ADUs, right? The additional unit in the back or wherever they want to put it. You can buy a home and we will do, or we have the product to build an ADU for the property. So if the property, and again, and you mentioned Alapata, I believe that's in the city of Miami. So Alapata being the city, they may allow an ADU depending on the density, basically the lot size of the property. So if you find a property there that you like, you can actually come to us. We'll do the whole thing. You have a brand new ADU. It's a great way for a younger couple, younger family to, have the in-law quarter legal, live there for a few years, and now they have a duplex that they own once they move into something bigger and better. So, I mean, the availability of financing is endless. The solutions that we have are endless. We just have to really think what is really happening in our market. And one of the reasons that I wanted to talk about this is I'm seeing it. I'm seeing it. I live in an older part of town. Every house that's on the block now has gotten some kind of renovation. But I do know that not everybody's got the cash to do it. So we are able to help you with that. So, I think this is the way to go to get people into their homes and locations that they want to be in.
Right, before I jump into construction loans, Alondra has a great question. She says, would the compensation be based on the purchase price or on the total post-renovation price? No, Alondra, the compensation will be based on the contract price. So if they're buying the example I was using for 420 or 420, right? You're buying the property for 420. The other 125 that they're going to borrow to fix the property, that is separate. That is a separate loan. So your compensation is based on the purchase price. But I got to tell you, over 1,000 realtors that I talk to on a regular basis, there are a lot of entry level buyers that are looking for this option because they rather own a single family home, especially in the market that we're in right now, which leads me into the next one with everything happening in the condo space, that they have an older home where they own the land and then they can fix or expand, or like Ruben say, keep expanding and add an ADU in the back and then supplement that income. So we're seeing a lot of that. So because of the condo market, when we're seeing a generation that is exiting Brickell, it's very funny, that had done very well because they got into Brickell at an early time, and now they're looking to, they have two kids, a dog, a cat, and a nanny. So then the 2-bedroom apartment no longer works. So they want to go a little west. They don't want to go west. They just want to go a little west. So that pocket between Flagler, you draw a line, it's like a pie, Flagler, Dixie, all the way to 37, right? That whole area is it's being changed block by block. So single family home in that neighborhood run between 700 and 800,000 for literally a teardown. And newer homes are selling between $1.8 million to $2 million. But I'm not saying go with the angle of a builder, but with an angle of a buyer that can buy the home. And then, so I have a buyer, we're going to buy this property. It's, like I said, it's look, I just found one, 650,000, 27th and 20th Street, 27th Ave and 20th Street. Great neighborhood. You're east of the Gables, you're next to the roads, single family home. The lot is 6,500 square feet, 650, right? Comps in the neighborhood for a brand new house about 1.8. So you're literally buying the land for 650. Construction costs, work come and go, probably about another 500, 600 grand. So how do I get my buyer to get a construction loan for that property? Do I have to do everything from the beginning? So he has to buy the house first and go back for a second round? How does that work?
Well, again, like we always talk about all our trainings and workshops that we do, we have to plan. So if there's two ways of looking at, not two ways of looking, there's two types of construction loans. Construction for the end user, which is kind of what you're talking about, and construction
Yeah,
for a builder that wants to buy or spec on a house and try to sell it. That's not what we're talking about. We're talking about a construction for an end user. What's nice about
Yeah,
the
yeah.
construction for the end user is that it's not a big down payment. We can go as low as or as high as 89.9% loan to value on something like that. So again, it's a complete construction that we're talking about. Part of the construction cost of something like that is going to be demolition, which is not cheap. Okay, knocking down a house and removing the debris is not exactly as cheap as it used to be. So that'll all be taken into consideration. That is what we call a two-time close. Okay, it's a two-time close. So you were going to do a construction loan today, right? Buy the house, you give you the construction loan to buy the house and or the lot, better said. Obviously, there's a down payment requirement, all that stuff normal. They have to qualify for the house at the value that's going to be. So at the second loan. So this one is works a little different where they're only paying interest on the amount used. So let's say they've paid, I don't know, I forgot what numbers you used, but let's say as is was 700,000. So the loan amount, I don't know, was 600. So they're paying 600, paying interest on 600,000 plus the draws as they come. It's interest only on the first loan, okay? They go through the first loan, let's say it takes a year to build the house, they finish, and now they owe, oh, I don't know, 1,500,000, the 600 plus another 900,000 in construction. Now that loan becomes
Are
this
you using my
two-time.
cousin to build? Are you using my
I
cousin to builder? Because
I know, I know.
at
I'm
250, at 250 a square foot, and that is not, ladies and gentlemen, that's not a crazy number in construction unless you go bananas with the finishes. You can go normal with the finish, about 250 a foot, 27 square foot house with a two-car garage. It's about 675.
I understand,
So
but
you're
I
about
like
a
to use round numbers. So
million
whatever it is, so
three.
now you're talking about 1,300,000. It is what it is. The point is that when you're only paying interest on the initial, let's say, loan, right, which is the purchase and the construction cost. Once the house is CO'd and they move in, it's the second close and that becomes a permanent loan. So now they're paying. So there's not a refinance. It's all built in. There is some additional cost. You know, building a house does have cost. And typically we want to make sure it's a legitimate contractor. The draws do not go to the owner. The draws go to the builder. Combination, kind of like an insurance check. You know, if you do have a claim, you get an insurance check, it goes to you and the insurance company or the builder, whoever
Yeah,
it is, the
yeah.
same thing. Typically, we try to
Okay,
do
so then,
six draws, so or no more than six draws. So it's not like they're just going to give you $1,000, $1,000. No, it's chunks. Especially the first initial draw is the largest typically because you have soft costs, hard costs, all that's got to be factored into, basically starting to build a house.
okay. So, but like we said, these buyers, where there's ton of them, they moved into Brickell when it was very affordable. Brickell has more than triple in value, and now they can sell their two-bedroom condo for about 1,200,000, pay what they owe, walk away with about 800 grand in their pocket. So now they have money for the down payment. They can finance, and they don't even have to finance the whole construction loan. But all of a sudden, you have an opportunity to have a different kind of conversation with the buyer. Because if they're gonna go ahead and buy something on for sale, everything that is for sale in that area that is brand new, they're asking between 1.8 to 2.4. And they're gonna get in for about 1.3, 1.4. So it's a substantial difference when you just gotta roll up your sleeves and do the work, right? Maybe rent for a year, rent something cozy for a year, and roll with it. But it gives you a different angle with these buyers that are exiting, because you're seeing there's an exodus from the 2000 to 2008 stock of buildings in Brickell because of current assessments. And
Yeah,
that area, I think that's the area Ruben learned how to ride bikes. It's a very nice streets, very nice neighborhood, very safe. Literally, you're sandwiched between the best of the best: the Grove, the roads, the Gables. I mean, you got everything that you need within a spit away, and you get to have a brand new home.
yeah.
One of the last questions I have with that, Ruben, was at the end, the house is finished, house is CO. does it magically the loan just become a one-time loan, or do you guys do another
Yeah,
appraisal?
no another appraisal, but it's a two-time close. It's cheaper to closing on the second, but you have a different, the reason it's a two-time close more than anything is that we're talking about a year, but let's say it takes 2 years. Some of these houses take a little bit. I can't give them the interest rate today and then give them the same rate in 2 years. That's why the second, more than anything, that's why we have the second close. So the permanent loan, once the house is CO'd, will be based on that market at that time. It could be lower, it could be higher. It depends on that. That's really why it's a two-time close, because it becomes a permanent 30-year loan for the owner. And you mentioned the move from Brickell to, like, in that area, I believe that you're talking about, we used to call it Coral Gate. I don't know if they still call it that or not, but um,
They do, but I think me and you know that. I don't think most people know with that. But yeah, Jorge,
well,
yeah.
there's a plaque at the baseball field on 32nd and 16th where I hit a home run. No, I'm kidding. So, but
Who did you hit with the ball?
I know with a bat. Uh,
Yeah.
But I'm seeing the opposite. We're talking about the silver tsunami. So down the street from my house, what we have is the other scenario where we have a couple, entering their 60s, where they sold their 5,000 square foot house in Lighthouse Point, and now, but they don't want to buy in a condo, right? And they don't want to renovate. They don't want to do anything, or they don't want to be in a house. So house down the street from me, again, same thing, complete and total renovation, smaller, but it's a home. It's brand new. They walk in, they bring. Actually, I actually bought this furnished. So the realtor or the seller paid for, what do you call that? What do you call it when you guys do the furniture? You bring them in staging,
Staging?
and
Staging.
they love the
Staging.
staging furniture. I guess they bought it. So that's how easy they wanted it. They sold everything. So that's what we're seeing too, because of the condo crisis that we're dealing with. We're starting to see the opposite too, not just the move up, but move down buyers doing the same thing.
Okay. All right. So um I think we're wrapping it up. Whilst I'm sitting here, I'm getting breaking news that I'm gonna let you read on my phone.
I'll give it a little dance. What is it?
I mean, so the 10 year started spiking again, and he just, uh I don't care what your political affiliation is. On that one, I have to agree with him. I think
Mhm.
what was that guy that ran for mayor in New York? Rent is too damn high. I think I'm
Yeah,
gonna I'm gonna become the
yeah,
Cuban version of that. The rates
yeah,
are too damn high. So
yeah.
I'm gonna end it with that. Ruben, thank you so much for everybody listening. Tomorrow we have our presentation on business planning session. If you yet have not signed up, I'm gonna share the link on all the chats of the office. I think there are some seats still left. Ruben will be there. He's going to bring in a few tools that the Prime Group has to make sure that you guys thrive on 2025. I'm going to do my 2024 recap and 2025 forecast. And yes, I have to eat crawl because I was off on something that Ruben said back then, but you got to be there tomorrow to watch it. Thank you
Yep.
so much, everybody, for participating. Ruben, best way for them to get a hold of you.
Cell phone, leave me a message, text me 954-661-2790. Hope to see you all there tomorrow.
Yeah. Remember, if you're working with a buyer, it's someone that wants to buy. There are multiple options. It's not just one avenue. There are many different roads. If they have that inclination, that desire in their life that this is the time they want to become a homeowner, have a conversation, pull someone from the Prime Group into the conversation, pull Ruben. Ruben will even jump into the conversation because you might be underselling yourself. Have a great rest of your Thursday. See you all mañana.
Bye, guys.